This is Optimal Finance Daily, episode 800, How to Start Investing, by the Finance Twins of thefinancetwins.com. And I am your host and narrator of the show. My name is Dan, and welcome to our 800th episode here at Optimal Finance Daily. Hard to believe that we have hit number 800. And I'm going to keep this Friday intro nice and short for you today, so let's get right to our post as we start optimizing your life. How to Start Investing, by the Finance Twins of thefinancetwins.com. Learning how to start investing is intimidating, at least it was for us. We got our first jobs when we were 16 years old. One of us worked at a car dealership cleaning cars to prepare them for resale, and the other worked as a grocery store cashier. Eventually, we picked up second jobs over summer breaks to save up money for college. And even though we started getting regular paychecks so early, we didn't start investing until 6 years after we started working. The simple reason we waited to learn how to start investing is because we thought it seemed too complicated. We thought investing was only for rich people. We didn't realize that it was actually the best way to build wealth. Learning how to start investing is less complicated than it seems. Movies make the stock market look like a flurry of activity, and we just didn't want to lose the little money that we had. Now that we understand how simple it is to invest your money, we wish we would have started right away. If you are looking to learn how to start investing, then this article is for you. You've probably already used our easy retirement calculator to figure out how much you should be saving for retirement, and now you want to know how you can start making your money grow in the stock market like they do on Wall Street, right? The truth is that learning how to invest in stocks is simple, but most people assume it's complex and confusing. Before we start learning how to start investing, here's some good news. You don't need a degree in finance or to have worked on Wall Street to invest wisely. We learned that lesson the hard way, so you don't have to. The first step is to decide which type of account you want to use to invest your money. Let's break down the two major types of accounts you'll use. Step 1. Choose an account type. Tax-favored versus taxable investing accounts. There are multiple types of accounts you can use to get your money invested in the stock market. We like to first group them into two main categories: tax-favored and taxable investing accounts. Tax-favored accounts. Tax-favored, also known as tax-advantaged accounts, are investing accounts that are given tax advantages by the government to encourage people to save for their own retirement. The big ones are 401k and the IRA, including the Roth IRA. Taxable investing or brokerage accounts. On the other hand, taxable investing accounts can be invested in the same way as 401ks and IRAs, but do not get the same tax advantages. The profits you earn in these taxable brokerage accounts get taxed as capital gains. This is in addition to the income tax you already paid on the money you put in. They do, however, have the advantage of being able to be withdrawn penalty-free at any time. Regardless of which type of account you use, you will choose how your money is invested. You can buy stocks, bonds, index funds, which are basically a group of many stocks, or any other type of security, which is a fancy word for investment that can be traded. Which type of investment account to use to start investing? We suggest investing in the following order. 1. 401k up to the employer match if your employer has one. 2. Roth IRA until you max it out, $5,500 limit in 2018. 3. 401k beyond employer match until you max that out, $18,000 500 limit in 2018. And 4. Taxable accounts, no annual dollar limits. The reason we recommend investing in this order is because it will help you minimize the amount of taxes you'll pay over your lifetime. This isn't the right order for everyone, but for most, it will be more than enough. Remember that the tax-advantaged accounts like a 401k and Roth IRA have limits and cannot be withdrawn before retirement without paying a penalty. If you are hoping to save money for 10 years and then withdraw it for a large non-qualifying purchase, there are some exceptions for early 401k and IRA withdrawals, then utilizing a taxable brokerage account may be the right choice. Step 2. Open an investment account. Whether you want to open a tax-advantaged or taxable brokerage account, you have to select a brokerage firm where you will deposit your money and select your investments. There are a ton of different firms that you can use. The only exception here is that if your company offers a 401k retirement savings program, you must use the 401k service company that they select. Some of the standard names in the industry are Vanguard, Fidelity, Charles Schwab, and the list could go on. There are also robo-advisors out there like Wealthfront and Betterment, which are basically brokerage firms that decide what to invest in for you. And there are also startup brokerage firms like Robinhood, though they offer more limited options. Ultimately, which one you pick is a personal decision. We like Vanguard and Fidelity because they offer a range of low-fee investment fund options, as well as the ability to handle both tax-advantaged accounts and standard taxable accounts. If you don't ever even want to think about the investments, a robo-advisor could make a lot of sense since they take your money and invest it for you, for a fee, of course. Step 3. Choose your investments. This step is where the fun begins. Everyone assumes that learning how to invest is complicated, but it doesn't have to be. Actually, the data shows that it shouldn't be. The dirty little secret that some of the big financial institutions don't want you to know is that you shouldn't pick individual stocks. Just don't do it. We don't care how much you love your Apple iPhone or Samsung TV. That's not a good reason to go buy Apple or Samsung stock. Picking investments is easy. If you aren't trying to pick individual stocks, then investing becomes extremely simple, and you may even find it boring. And that's a good thing. You'll want to pick low-cost index funds. These are essentially single investments that contain slivers of many different stocks. In effect, you'll own nearly the entire stock market. The beautiful thing is that if you stick with diversified, low-fee index funds, you'll outperform the majority of professional investors. Remember, the best investments are the most simple. Step 4. Deciding how much risk to take when learning how to start investing. Once you've decided what to invest in, you'll want to decide how risky to make your portfolio. And again, this is less complicated than it sounds. In a passive index fund-based investment strategy, which is, as we mentioned, the easiest and best way to invest, you'll only need to pick as few as 2 or 3 different investments. One of those investments will be bonds. In general, the more bonds you invest in, the less risky your portfolio will be. But that doesn't mean you should only invest in bonds to lower the risk. Bonds also have lower expected returns. Our guide on how to master asset allocation, which is the fancy word for the balance between stocks and bonds, will break it all down for you. In closing, just remember that investing is a lot less complicated than it seems. If nothing else, create a simple 3-fund portfolio. The only thing you need to know is that the sooner you start investing, the better off you'll be. You just listened to the post titled How to Start Investing by the Finance Twins of thefinancetwins.com. And that's going to do it for today and for episode 800 of Optimal Finance Daily. Thank you so much for your support and for listening each and every day. We could not have made it to number 800 without you. So have yourself a great weekend, and I'll be back with more posts for you next week. So I'll see you there, where your optimal life awaits.
Hello, Life Optimizer. This is Justin Malik, creator and producer of this podcast, but also Optimal Living Daily, the show where I read to you from even more blogs covering finance, productivity, minimalism, personal development, and more from incredible bloggers like Derek Sivers, Zen Habits, Mark and Angel, The Minimalists, and all the ones you hear on this show too. So if you enjoyed today's episode and like taking amazing blogs on the go, come on over to Optimal Living Daily and subscribe to that one too. And together, we'll start optimizing your life.
You've been listening to Optimal Finance Daily. Be sure to hit the subscribe button to stay up to date on each new episode and head to oldpodcast.com. That's OLDpodcast.com for a free gift as well as more actionable tips and resources to help you maximize your potential. Thanks for joining us, and remember, your optimal life awaits.